Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's February 28th, last day of the month. Hey, we got a few items to go over, so let's jump right into it. We'll start off with the weekly jobless claims we get every Thursday. So last week they did revise a little bit. It came in at 216,000 and revised it up 1,000. So now the actual official number is 217,000 people applying for unemployment. Forecasts were calling for 225,000. It came in right at forecast, so still a pretty good number here, which we're seeing on the weekly jobless claims. And of course, as we've been saying here for a little while here, we're watching this very carefully to see if this starts trending upwards. To see if we bottom out and then trending upwards, just because a lot of people have been calling for a possible recession due to all the Fed rate hikes. So we're kind of watching to see if we kind of bottom out or not. We also got the GDP for the fourth quarter. So the third quarter final revision came in at 3.4, great number there. Forecast, because of the government shutdown and everything, they kind of forecasting not so good of a number at 1.9, and they came in much hotter at 2.6%. So this is obviously a great number here. We'll have a couple more revisions on this, but the fourth quarter right now at 2.6, the initial reading here. And last but not least, we've got manufacturing in the Chicago region, which the Chicago PMI is the index we look at. And on this type of index, we look anything above 50 is considered expansion or optimism. And we had a 56.7, so it's decent, but it really jumped up in February, as you can see here, to 64.7. So great number here overall here. So overall, good news on the economic calendar. However, on the headline news, the stock market is down. Taking center stage as we're getting kind of more of these geopolitical news here. Apparently, there's a non-agreement with North Korea, with President Trump's meeting with President Moon in Hanoi yesterday. So there was no agreement on the denuclearization of North Korea yet. Apparently, it sounds like they want us to remove a few more sanctions against them before they would go in that route, and we were unwilling to remove those sanctions, so they couldn't come to any type of agreement as of yet. There's also, of course, we mentioned this yesterday, tensions between India and Pakistan. There was reports that Pakistan shot down two Indian jetliners that flew by and apparently captured one of the pilots. And this is over the region, of course, in Kashmir. And this has been kind of building up a bit more. We've had some peaceful times there for a while now, and things are kind of heating up again. So this, of course, has investors a little bit on edge a little bit here. We do got throughout the day here, we got several Fed speakers speaking today. So we don't expect any, especially after the 2 days of testimony from Fed Chair Powell, we don't expect anything out of the line, but we may hear a few, out of line as to the Fed decisions and everything, or maybe any surprises. But we do have a few Fed speakers out there speaking today. If anything does go against the line of thinking, that, of course, that will catch investors' attention and may create some uncertainty and make the stock market even worse or so. Speaking of stock market, let's kind of jump over into the bond market, see how mortgage rates are doing. We are now broke below the 25-day moving average so far this morning, and now testing the 50-day moving average. Now we got this double kind of support here. We'll see if this holds here. So we're down currently about 16 basis points, which will translate to higher interest rates today compared to what we left off with yesterday. So interest rates are a bit higher today. When I'm talking about higher, we're talking about 1/8 of a rate into the rate. So we're talking, rather than half a point or half a percent or anything like that. So we're just, when I'm talking like this, we're talking about 1/8 of a percent to the rate. But 16 basis points, what we're looking at so far this morning. Again, we'll wait and see if this holds. Maybe it will improve a little bit, but we'll have to wait and see. As for the yields, it's doing the same thing. It's rising up, or breaking above its 25-day moving average. Matter of fact, you can see here it even opened above the 25-day moving average and is touching up against its 50-day moving average. We'll have to wait and see if it holds or if it pulls back or whatnot. So right now it's at the 2.71 range on its index level here, and which is creating the pressure on mortgage-backed securities. For a while here, as you can see, it's been held underneath the 25-day moving average, which is kind of which has helped mortgage-backed securities keep in that line here. But if it rises is going to put more pressure on mortgage-backed securities, and interest rates will continue to rise here. Hopefully, we can keep that in check, primarily because with the recent spike in home sales, a lot of it has to do with interest rates kind of creeping down from the October levels that we saw. And with that improvement in rates, is kind of helping home sales. Now that we're going into spring buying season, we'd hate to have interest rates rise and ruin that for everybody involved. So that pretty much wraps things up. As we mentioned, interest rates are a little bit higher today. If you guys are want to get any more updates, if anything else pops up, I'll be certain to put it on Twitter, so you can follow me at Mike Bjork on Twitter. Otherwise, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.